Hey everyone, welcome back to Corporate Decoder. In this video, we will decode the latest filing from Stellus Private Credit BDC, and by the end we will know if this BDC is a ball in a china shop or just another pigeon in the park. Before we dive in, make sure you're subscribed to Corporate Decoder for more of these straight-to-the-point financial breakdowns and join our Discord server, linked in the description for community discussions. Today we're looking at a Form 8K report from Stellus Private Credit BDC. Now, what is a Form 8K? Think of it as a company's way of shouting out important unscheduled news to the public. It's for those really big moments that can't wait for their regular quarterly reports. The main story here is about the company selling new shares of its stock. They're telling us that on September 2, 2025, they sold quite a few shares, almost 189,000 shares to be exact. And they raised a good chunk of money from this sale, over $2.8 million. What's interesting is how they did it. This sale wasn't done through a big public offering where everyone can buy. Instead, they used what they call subscription agreements. This usually means they sold these shares directly to a select group of investors. They also mentioned that this sale is exempt from the usual registration requirements with the Securities and Exchange Commission. This often happens when a company sells shares to a smaller number of sophisticated investors, meaning people who are already experienced with investing and understand the risks involved. Now, a key detail about Stellus Private Credit BDC is that they've checked the box indicating they are an emerging growth company. This is important because it means they get to follow slightly simpler rules and can delay adopting some new accounting standards. Think of it like a startup getting some breathing room on reporting, though in this case it's a company that's already publicly reporting. We're talking about Stellus Private Credit BDC, a company that operates in the world of finance, helping other businesses grow by providing them with credit. Business development companies, or BDCs like this one, are a bit unique. They invest in small to medium-sized businesses that might not get loans from traditional big banks. They're basically lenders and investors rolled into one, often dealing with companies that are growing or in transition. The filing is signed by W. Todd Huskinson, who holds a triple title of Chief Financial Officer, Chief Operating Officer, and Secretary. This shows that a key executive has reviewed and approved this report, making it official. Overall, this filing is a straightforward announcement about raising capital. There aren't any complex financial tables to dissect here, but the core information is that Stellus Private Credit BDC brought in a significant amount of cash by selling new shares to private investors. This suggests the company is likely looking to fuel new investments or simply strengthen its financial position. For a BDC, having access to capital is crucial because their business is all about lending and investing. Raising money like this can be a positive sign, indicating confidence from at least some investors and providing the fuel needed for future growth opportunities. However, lending and investing, raising money like this can be a positive sign, indicating confidence from at least some investors and providing the fuel needed for future growth opportunities. However, without more context on where this money will be deployed, it's a solid move for operational flexibility. Keep an eye on their future reports to see how this newly raised capital is put to work. What do you think about this capital raise? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more. And don't